Starting from a daily chart, we can see that yesterday here creating an open high low close bar. Um, Price left a couple PDAs of interest, which we can look at in this range. Overall, on the daily chart, right, price this here was a discount level of interest. In fact, the low of day was created right at 50% of this volume imbalance. Below that, there is right a suspension block. So two volume imbalances, right, and a fair value gap right in the middle of it. Series of order block. The way that this candle delivered, okay, obviously there's a divergence at the previous day's high. There's also a divergence at the previous day's low. So, right, the market is ranging at the moment. Okay, it's creating divergences on both sides. Tried to expand higher, failed. Tried to expand lower, failed. All right, and now is essentially back inside of this range. So, in terms of premium arrays of interest, I think, right, maybe this is a valid level, but overall, I think that I would prefer to use the wick of Friday, okay, since yesterday I found a rejection from those levels. Yes, it did trade above it, okay, but it didn't close above it, and the reason why it traded above it, there was also there was a gap up at the open. Last week closed at these levels, and so far the week has opened in premium. Right, so the market gapped up through 50% of the wick of Friday, right, but failed to claim it. In fact, the market creates a body here through the wick of Friday. So I think that this is still a relevant level. In case something like this were to happen, this is a relevant level. If price were to break these levels, okay, then I think that it's going to be targeting the previous day's high. So premium level of interest, right? This range of wicks, premium wicks that the market has created. In terms of discounted levels, the first one is the previous day's wick, the discount rejection block from yesterday. Why? Because this on the lower time frame, there's a reversal at these levels from a higher time frame discount array. Okay, so if price is really bullish, it could simply use the wick at these levels, leave this fair value gap as a breakaway, and keep trading higher from there. If the wick, okay, were to get disrespected, then low hanging fruit target, right, in case of a bearish profile, would be the low of Friday, right? And you can also have the quadrants up. Say we have this here also, right, which is somewhere around this range overall. Now, why this rejection block? Well, because this is a mitigation block. Okay, this is a previous range high. Eventually, the market retraced and then expanded from there. And we can see that there's many PDAs cutting through this rejection block. So overall, I would say that we have an important premium array at these levels, and we have an important discount array. So these are the two levels that I'll be watching tomorrow. Obviously, there's still the range of the volume imbalance, but because the previous day's low, right, came at these levels, if price were to now trade under the previous day's low, then I believe it's going to want to trade somewhere around this range, and from there, it could retrace, could consolidate, or could expand higher, which would be the best case scenario, right? Some kind of Tuesday, Wednesday low to then make a new high on the week. Just as it could do this also, right? There's a scenario that's possible. Overall, I don't think we're going to see a reversal. It could happen, obviously, but I don't think it's likely in this case because it's the first week of the month, the first full week of the month. So I would prefer to see either price obviously expanding, right? That's the best case scenario, or for the first week of the month consolidating around these levels, and then we'll take it from week 2 and week 3 of the month. So the range of discount arrays, pick your poison here, there's many of them. I'll use the mitigation block in this case. and premium array, the rejection block from Friday that price still hasn't been able to claim. If we look at a 4-hour chart, 3-week look back, obviously the range is trading in premium, so we can simply focus on the previous week's range. We can see that yesterday, that respected an important level, hasn't expanded away from it, but so far has found some kind of lower time frame reversal, right? You can see all the wicks that are located inside of this area. And again, this level is important to gauge order flow because of where it's located. It's a fair value gap that cuts right through 25% of the previous week's range. Now, this doesn't mean that price needs to respect it, right, to keep trading higher. I mean, this week's profile could maybe want to revisit discounted prices before trading higher. Okay, so even if this fair value gap were to get broken, I think it's still a relevant PD rate to keep on your chart until, at least the end of the week, because right, price could eventually use it as a reclaimed or could start using it as an inverse fair value gap, as an inversion PD rate. And obviously below these levels, right, the other PD rate of interest is the wick high of the order block from Thursday. Right, this is a discount level. You can see that the range at these levels is high resistance. Okay, so we also have ranges of fair value gaps, right, the mitigation block and whatnot at these levels. So I'll be anticipating, if price were to trade at these levels, okay, a potential low of week. If we look at the previous day's range and the range from a 3-day look back, we can look at the price range in the last 3 weeks. We can see that, right, the market has now built high resistance at highs, okay, in premium, and so far is trading under it. Okay, so this could be an indication that, right, price may want to revisit discounted levels inside of the range below the low of Friday. There's obviously a fair value gap, right? If we see here under the low of Friday, right, there's a daily fair value gap. And if you even, right, this can even be refined, right? This is a refinement, as it's a 1-hour fair value gap located inside the daily fair value gap. Okay, so if today were to create a bearish profile, this can be a great low-hanging fruit objective, just as it can be a good area for a reversal. Okay, because if price will be bullish, right, as we saw, there's a lot of bullish PD rays inside of this range. The range is high resistance, and we have a potential, right, if price at this point is bearish on the lower time frames, this makes for a good target. Why? Because this is a short-term low that did not revisit at least 50% of the fair value gap from which it expanded. So this would make a good area for a turtle soup, right, on the weekly profile perspective. Overall, you can see that price respected yesterday the PD rate of interest that it had, which was the hourly fair value gap that cut through 50% of its range. You can see price respecting, never even closing below 50% of it, and eventually in the PM session finding a lower time frame reversal once it closes it. Okay, so this is obviously still a PD rate of interest to have marked up. Obviously this doesn't come from the previous day's range, but this can be used just, it's about the same range on the 4-hour, right? Either as a shakeout inside of it to trade higher, or to be used as inversion. Below this low, we also have the fair value gap, and we have the 4-hour order block and the 1-hour order block. This is a discount array, so if today were to trade inside these levels, right, pay attention what it does around the quadrants. Does it create fair value gap through the quadrants? Does it create order blocks? Does it create bullish divergences around them? Okay, followed by market structure shift. If we focus on the previous day's range here being a swing to Z profile, okay, so a consolidation profile, London creating the high of day after making a divergence at the previous day's high. And if we look at the price profile of this curve, okay, we can see that price consolidated mostly around 50%, so indicative of a consolidation profile. But most importantly, what did it leave inside of this range, right? What are the important PDRAs that it left around the main area of consolidation? Well, in discount of the range, there's obviously a rejection block. Okay, why this? Right, just as I talked about, if price is really bullish, it can hold the rejection block from yesterday to trade higher from these levels. This fair value gap, this rejection block obviously comes from the closure of a fair value gap, which saw lower time frame reversal. It also comes from a shakeout, right? A shakeout that has divergence at previous day's low, and the one that at price here was in a range, did some kind of double sweep, double purge. Okay, so discount array of interest. There's a premium array of interest. There's an order block. Why is this order block important? Well, it's because this order block is located at, it's located in the range from 50% to 75% of the previous day's range. Okay, so this is a premium array. And this, on the lower time frames, this range of up close candle, it ended up being a shakeout. Right, price was inside of a range. This series of up close candle brings price above the range to then break it. Okay, so we have an order block, and in between the bearish order block in premium and the rejection block in discount, there's a very obvious fair value gap. Okay, which should be the PDA of interest for the day, in my opinion. If we look maybe on the lower time frame, say on a 15-minute chart, you can see the market trading at the lows and from there finding a reversal, and now this expansion has been followed by a consolidation. Right, and price is consolidating inside of the hourly, right, and here at the open is consolidating inside of the BISI. Okay, so what scenarios can happen from these levels? Right, we saw that price expanded lower until it rejected and then created a lower time frame reversal that is now followed by consolidation. So the market could expansion, consolidation, manipulation, okay, to trade higher from these levels, or vice versa. Expansion, accumulation, manipulation inside of the fair value gap, inside of the order block, okay, to then trade lower. Okay, so whatever the profile of day will be, right, say it will be a classic sell day. Sorry, I had to interrupt the video. So what I was saying is, if price were to manipulate above the PM highs from yesterday inside two premium levels of interest, it could be that price will not need to revisit, okay, the range of this fair value gap in New York, but what you're going to want to pay attention to is the rejection block, right? Or after price trades inside of premium, how does it treat this range? Does it start creating fair value gaps through it? If it does so, right, watch out to see if the market comes back inside the fair value gaps created inside of the rejection block to target lower prices, such as Friday's low or 50% of the fair value gap that cuts through the order block. I wouldn't say that the fair value gap is more important than the rejection block or the order block. Sure, it is the main PDA of interest just because of the fact that it's located right in between of both of them. But I think what's more important is to see, obviously, where is price and time. Okay, is price and time trading around this range? Is it trading around this range? Or does it come from this range and now, right, it's trading here? How does it start treating the quadrants in here? So overall, you can keep these levels, but just pay attention to where price is trading and where price comes from, and from there you could refine it. Say price comes from here. Now New York is opening at these levels, right? It doesn't have to necessarily come back to the fair value gap, but it could simply use the range. What would be a breaker in that case, right? The high that leads to the low. Price comes back to it, simply uses the high of it, right, and then expands. We got relative equal highs in the range. Vice versa also, right? We talked about this example. Say price does this and then starts expanding through these levels. You can target discounted levels from there. So 1, 2, which is the main one, okay, the fair value gap that cuts in between the premium and the discount rate. Right, and this number 3 being the discount rate.